Today's video is something you definitely want to watch if you are considering a new construction home. Today we're talking about one of the biggest home builder financing ripoffs, and we have an example to show you today, which is probably one of the worst ones I've ever seen, but they are out there. And we want to do this video to help you understand how to properly analyze these financing offers from the different home builders, because you probably, if you're looking at new construction, you've seen them when you go into the sales center. Maybe you get emails from home builders if you subscribe to their newsletters, but they're not always what they seem to be. And you really need to understand how these offers are structured so you can make an informed decision before you decide to take one of these financing offers. So I'm going to put something up on the screen. This is from a home builder. I won't name and shame them, but this is from a home builder that sent me this email, and I took a screenshot of their financing offer. It's up on the screen now. Have a look at it and think to yourself, does this look like a good deal? Now, regular 30-year, we'll take FHA rates. Sasha, right now they're what, like 7.3, give or take.
Well, they've actually dropped quite a bit in the last couple of days. We're at 6.74 right now.
Oh, very
roughly
good
for FHA. So we are coming down a little bit, and that's middle of November. Not bad.
All right, we're on the right track. So so this one that I got it back on the screen now. This one is a 5.75% rate for the first year. So the first thing we have to understand is, what exactly is this offer? And it looks like a rate buy down. So can you help us understand what that means?
Sure. So first of all, whenever you're looking at anything that has to do with finance of a home, you want to look for the magic number, which is the number followed by the letters APR, annual percentage rate, because that really tells you what is in the mix of your, not only your rate, but the loan costs in general. So this slide that we have, it looks great, right? 5.75, who wouldn't want that deal right now? I would, I'd take it. I'd be all over that. Except when I slide my eyes along continually to the right and see the 7.972% APR, that means that this builder has got a lot of fees built into this loan. So the loan is costing a lot of money up front. Some of those fees are going to be for the rate buy down that we mentioned. You can imagine rates like flavors of cans of soup. This is how I like to talk about it with my borrowers. Every day, a different flavor's on sale. So every day, rates are changing according to the market, and wherever the market lands, that's the flavor of soup that's the best today and on sale. And that's where, generally speaking, there will not be a cost for that rate. You just lock in your rate of, like today I mentioned it was 6.74. So if you do a rate buy down, what you're telling the market is, okay, I get that the can of soup or the rate of 6.74 is the rate today, but what if I use some of my cash or some of the seller credit or a gift from somebody and buy that rate down to, I don't know, however much we can. But the bottom line is, you will be able to talk to your loan officer and say, instead of just doing a 1-year buy down like this builder is showing us, why don't we look at doing a forever buy down where this loan for the next 30 years has a low interest rate? Does that kind of make sense, Steve, where we're going?
Absolutely. Yeah. And I'm going to pick on this particular builder without naming them, because I get these offers in my inbox all the time from different home builders. As a new construction specialist, I'm on everybody's radar. So they're always sending me their stuff. And this is the worst that I've seen. Typically with other home builders, I've seen better offers that are 3-year buy downs. So the first year, it's a 3-point drop, second year is a 2-point, and so on until you get to year 4, and then you're at your permanent rate. And the APR is much closer to the note rate, to the actual interest rate of the mortgage. That means that the fees are going to be less. In this particular case, what I'm seeing here, and I'm making this assumption, you can correct me if I'm wrong, But this particular builder, instead of discounting the property through a credit and then offering that credit through a buy down, they're essentially calculating the cost of the credit and adding it into the loan fees. Essentially, it's like a gift that they're taking back from the buyer. And the buyer doesn't realize, unless they understand how this is structured, they don't even realize this is happening, that they're essentially being charged the cost of the buy down. Whereas other home builders that I work with are very transparent and say, all right, well, we're not going to give you a discount on the price of the home, but we're going to give you a $25,000, $30,000 off, essentially, that's being used to buy the interest rate down significantly. And you see a much closer gap between the interest rate and the APR. So the takeaway here for folks who are watching and who are considering new construction homes is, don't go into the sales center and believe everything you see and believe everything you hear. And I've done a separate video on this, so please have a look on my channel where I talk about some common builder lies. This is one of them. Just because the home builder says, hey, this is a fantastic deal and is dressed up in a nice marketing package and everything, you need to be working with professionals who can help you understand how these offers are structured so you can figure out if this really is a good deal for you, and then make an informed decision. Because with builder financing, sometimes it's a great deal. And I've seen some fantastic home builder financing offers that were really great for the buyer. And sometimes I see something like this where, walk, don't run away, because it is really, really bad. And you don't just go into the sales center and say, hey, it looks good to me, let's go. You really need to be able to compare. And sometimes that comparison is going outside and talking to a mortgage broker who has access to different loan products from different banks and funding sources, who can give you maybe a totally different offer than this. It looks much better.
Absolutely, Steve. One of the big things that the finance world did in general in 2008 was they created what we call the loan estimate, which is a standardized form which will show buyers exactly how their loan is split up in terms of the rate, if you have any escrow, the property taxes and insurance in that loan. But more importantly, it goes over the closing costs of each loan. Every single section is pertinent for a different, let's say, third-party participant in the transaction. What you always want to do with lenders is check Part A, Box A, which says origination fees. Because as you mentioned, there's a humongous difference between a lender that works for one bank and one bank only. They can only offer products and rates from that one bank. And so if the deal doesn't look good to that bank, you're going to get a really yucky rate. Right. Whereas a mortgage broker like myself, I have the opposite happening. I have the banks coming to me saying, hey, we want your clients. What can we do to entice them to take one of our loans instead? And that always comes back to our clients, which is really one of the main benefits of working with a mortgage broker. So what you really want to do is, by all means, as you mentioned, there are really great builders out there that are doing some fantastic deals for clients. There's no doubt about that. But you want to get the loan estimate, and you want to know if that loan rate that they've offered you is locked or not. Because the other side of this that I've seen is people going in, builders having phenomenal rates, but they're not locked. And if your rate is not locked, it does not mean anything. I could tell you that you have a 3% rate, and if it's not locked, tomorrow when you say, okay, give me that 3% rate, I can literally turn around and go, whoops, not available today.
Yeah.
And that can be, obviously that's not how I do business. That's not how the majority of lenders do business, but it is a pitfall, and it is what we call a bait and switch. It happens in our industry all the time. So get your loan estimate, your LE from the builder's lender, and take it to your local mortgage broker. That mortgage broker will look at the loan estimate and really be able to compare apples to apples, because in that loan estimate is all those details that we loan officers need. you guys as buyers don't really pay that much attention to, which is great because we're supposed to be doing that for you. But it's super, super important that you're comparing apples to apples. And the only people that really can do that professionally are mortgage loan officers, mortgage brokers.
Yeah. Yeah. And typically what I've seen is the first time you get the loan estimate, well, you're already under contract and your house is under construction. And then you get the loan estimate and you look at it and say, whoops, or either this doesn't look so good or they don't realize it. And then we get to closing and they're looking at the settlement statement and they see a lot of details there. And well, what's this $15,000 fee for? Well, it's too late.
Exactly.
So
exactly.
This is something that has to be tackled early on and before you make a commitment. And most good home builders will give you a window. Actually, it's a mandatory window for you to confirm financing. So you have an opportunity to get all of the details from the builder's lender and then get competing offers from one or more mortgage brokers. And then you choose what you feel is the best deal for you. Most important, you brought up the rate lock. Super important in new construction because the delivery schedule for the home is not necessarily going to be what they tell you when you sign the contract. They can tell you, oh, it's 6 months, and it turns out to be 7.5 months, and your rate lock expires. Now you got a problem because maybe rates are going to be significantly higher. So
exactly. And one other point I wanted to mention, when someone gets their loan estimate from the builder's lender, the other question I want them to ask is, will any of my costs change if I don't use your lender? Because there's another scenario that I'm beginning to see, which is if you don't use the builder's lender, then you're all of a sudden going to have a couple of more closing cost fees, which are actually, they call them marketing fees. And basically that is the price you pay for not using the builder's lender. I'm pretty certain somewhere in there's kickbacks, there's incentives between the builders and the lenders. I can't speak to any of it. I'm not privy to any of it, but it's a really important point. What you don't want is to think you're getting a great deal with a mortgage broker, and then all of a sudden the home builder comes and says, well, because you didn't use our lender, we're now charging you a $15,000 marketing fee.
Yeah.
And that gets really, really yucky when you see that.
I would call that a sleazy move for sure.
Yes,
and definitely
absolutely.
a trap. So, and this is why, if you're considering new construction, it's not always a simple, easy path where you go to the sales center, you meet, some smiling person who's there to help you. They may not be there to help you. They're there to sell a home, and they're there to sell the home at the most advantageous price and terms for the home builder, who is their client, essentially. They're representing the seller. They're not representing you as the home buyer. So that's why professional representation, somebody you can go to and ask questions and make sure that these things are not happening. And then if they are happening, be able to guide you on the process to simply walk away and find something else, which is an option. Exactly.
And frankly, another point of this is, if your builder is being unscrupulous with you now, when you're buying the home, it's probably not a construction that you're going to be super excited about in 5 or 10 years time.
Right.
So again, it's just kind of about, working with professionals that are professional in their entirety of their service.
Right. And real quick, just as we're wrapping up, because I know we talked about APR. So the APR is a tool. It's created by the government some time ago. And it's a tool that every lender, anyone who's offering finance, it could be a home builder, a mortgage company, a car dealer. So any business is offering credit has to publish an APR. And that APR is not designed to tell you if it's a good deal. It's designed to give you something to compare apples to apples.
Exactly.
So if you can look at 5 different loan offers, you look at the APR, not just the interest rate. And then that will tell you, hey, which one is really the best deal? It's probably the one with the lowest APR.
Exactly. And, just for everyone's, again, I know you said it at the beginning, but what you want is your note rate and your APR to be
Yeah.
as close together as possible.
Hmm.
So for example, if your note rate is 6.99, I really don't want to see an APR above 7.25, maybe 7.5 if you're high cost area or something like that.
Right. Yeah.
But you're right. It's a true measure of the cost of that loan for the buyer.
Yeah.
And it's a way to compare apples to apples, as you said.
And that's why we've made fun of this particular builder who still remain nameless, but 5.75 interest rate and it's 7.972% APR. I just, when I got it, I deleted it. And then I said, you know what? I got to pull this out of my deleted items folder. We got to do a video about this because I know this builder is selling homes and people are signing up for this. And, I'm thinking, gosh, hopefully nobody did that, but I know they have. So we got to do this video.
Hopefully we can salvage some of those deals for them and make it a even better proposition for a new home.
Okay, sounds good. So, hey, as usual, any questions or comments, please do so below. Anything specific to you and your personal circumstances, obviously, please don't comment below. Send us a direct message, either email, phone call, or text. Our contact information is coming up right below our faces, so you can see it there.
Down there somewhere.
So reach out directly if you have any specific questions about your specific circumstances, but the general questions or comments or anything you want to engage in conversation, certainly comment below. And if you find this information valuable, please remember to like the video and subscribe for more content that we're going to be making regarding the new construction buying process and the new home journey. So thank you for watching. Hope this was useful, and we will see you on the next video.
Thanks, everyone. Good luck.